Hey guys, good afternoon. So we broke my 6750 and I didn't get as violent of a move as I thought we might get. First, it was pretty big off of my original daily ones up to my gap line at 6750. And then when it did break, you put this down on a 5-minute chart, you can see that it spiked. It did spike up pretty solidly. And hit the wall. The wall is the quarterly 2 and the gap line. So 67, 62, 50, the distance between the open and close on the quarterly is going to be the top through September 30th. If we're not, I mean, we might even be on it right now. Anywhere in this gap line, they can turn it around. So, you know what they say about sell the rip? I thought we might, pop up a little bit stronger, but they're pinning it for other reasons. Here's the pin right there. We didn't quite make it up there. The other reasons doesn't have anything to do with the ES contract. It has to do with the SPX contract. And we're on this major gamma wall right now at 6,700. Gigantic. All right. 6,700. Major gamma wall for not just today, not just through the end of the week, not just through the end of the month, but in October, November, December, January, all the contracts put together, adding all the expirations together, net gex, there it is, 6,700. And I mean, it is massive. So the total gamma exposure culminates at 6,700. And we just found it. So that had something, I think, to do with the amount of that violent reaction when we broke that pin that I was expecting. But needless to say, overall, we did balance on my pin that I thought we would. The VDI had the highest um, threshold level today for my indicator suite. So the pinning compression was most prominent today out of all the dealer positioning. Um, and I was expecting a gamma trap. So you might say that the 6750 was the gamma trap. What happened on that pricing sheet? I'll show it to you right here so that you can understand it. So if you pull up the Black-Scholes model on the settlement, which is something that Quick Strike can give you, you can pull up your pricing sheet and you can see, well, this has changed a little bit. Let me flip this back to settlement. This did actually change around a little bit. Oh, because we hit the settlement. That's why. Um, the sheet just changed. I think I took a screenshot of it though. Yeah, this is the new sheet, 6725. Let me see if I can find the screenshot I took and explain it to you, 'cause something that it was from today's settlement calcs. Well, when I want to find something, I can't put my finger on it. Um, I thought for sure. Here it is. Here it is. I'm sorry. I did find it. Apologies for that. All right. So you can see here that the 67.25 was at the money for the Black-Scholes model um, calcs on settlement, which meant, the settlement from Friday. And you see this 1-2 right here. The 1, if you come over, is on 67.50. So that is their pin. They don't want to get past that one um, implied volatility standard deviation. This is different than the one for the ES or for the Jats PT. Jats PT does not use standard deviation, but the Black-Scholes model does for implied volatility for their calcs. But you can see here the gamma was at 869, 746, and then it drops to 0062. See that huge drop? So they were trying to get to one more down at this 67.55, and that caused that pin on the 1 and the what I thought was going to be a gamma squeeze come back to the mean. That did not happen, and I was basing that on my pin for the quarterly also, 67.54. So it was a little bit higher than expected, but now we're getting the sell-off post-market, and you can see the volatility rising as they're trying to push us off of this level now that we've identified it. So if we break their pin at 60, let's see what this would be. I just moved it. 67, 62.50. It's going to fly up to that 67.74, but they're going to have to get through that 6,700 gex. Massive, massive pin there of gex. So this is what I'm trying to tell you could be the high for the moment. Close, very close. 62.50, if you want to get specific, would be their uncle point. And why is that? Because the dealer will use, like, for instance, we broke the quarterly range. Instead of them having to move the risk out when that breaks, they'll hedge it to one time the distance between the open and the close. And so that was their pin. That was their real trigger, 63.25 or 63.65. All right. So we're getting kind of close to these market highs, I think. Others believe that it's going to keep going. I'm not so sure. In October, for one reason, the term structure of the VIX flips to long vol long. So the VIX is going to have high rising volatility, which usually will bring the market down. And that really, right now, that term structure is October 1st. And it's range trading going into October 1st. So if we're range trading and we're at the pin high right now, we'll be selling these ones or buying the ones like they did here, buying the one, bought the daily one. And or selling the ones tomorrow. So when we get a new distribution tomorrow and we got the close, at 4 o'clock, we'll get a new distribution and we'll have a new set of ones to trade it in and out of. But I can tell you right now that the only chart that matters is this quarterly chart, 67, 63, 25. And you can see right here with their wick that they're trying to get you back below the quarterly too with calcs on the open. So we can calculate from the quarter open versus the quarter close, the prior close versus the current open, and that spread is your dealer hedge box. And it works on all time frames. So if you're looking at a quarterly distribution, you would do the quarter. If you're doing a monthly distribution, use the month. If you're doing a 30-day distribution, use the 30-day, because each time period has its own separate gap. Daily, weekly, or a actual calendar day for your term structure. 1, 2, 3, 4, 5, 6, 7. So a lot of people, familiar with volatility will tell you to do that top-down analysis. For instance, right now we're on the 22nd day. Tomorrow would be the 23rd day. I can run a 23-day distribution and tell you precisely where the statistical ranges were for 23 days. In fact, I'll put it on the screen for you right now. And so for 23 days, there they are, 138, 276, and 385.50. So you can count back 28 days. Right, to September 1st. There's the second. There's your first. And so if you measure from the bottom to the top, where we are currently, let's put it on this blue line, 321. So we've exceeded the two standard deviations. It's not standard deviations, I'm sorry. It's 2 sigma for the Jats PT. It's not ATR either. I do something differently. It's proprietary. I can't tell you what I use. But anyway, so let's just put it down. 64.26.50. Is that right? 64.28.50. I need to get new glasses. And then if I add 385.50, that is your 3 sigma max range. That would be 68.14. There we go. So that would be well above the box, well above the 6-month one. And I don't think we're going to hit that 385.50 for 28-day 3, but you get the point. You can do a top-down analysis to say on the 28th day, what are my levels? 276 would be more likely where the market algos are going to be keyed in on, and What was this low again? 64.2850. And if I add 286, 276 to that, 6704. So if we get a pullback to 6704, don't be surprised because that is your 2 sigma, 6704.50 of this range for your 23rd day of the month. I hope I did that right. 23 days. Yep, 23 days. So um, you can see we're over 2 sigma, 6704.50. So the market might go back to hit it. You see what I'm saying? So that's why you need your term structure. 6704.50 is right here on this monthly one. So it would come back down and test it. That would push us back below these 30-day ones. And it would likely start the down move. So that's how the dealer algos work. So you get your term structure, where are you on your calendar day? Are we going to make the full target or do we go back, to the 2 sigma? Are we going to hit 3 sigma? Unlikely because we'd have to go through all these resistance levels. Otherwise, we'll back up and potentially go for that 2 sigma target. So, especially if it's within a day's range and a daily range of 1 day is 4950 points. So looky here, 6746, 49 points is right there at 6700. You're gonna, you see what I'm saying? You're within a day's range of hitting that 2 sigma. So that might help you, plan your term structure in your head as far as where are you? Are we going to continue moving higher? What are the obstacles? What, the highest time frames blocking it? Are we going to be able to clear those levels or are we going to go back and check, a level from that calendar day term structure? All right. Well, I hope that helped. I don't know if I confused you or helped you, but today it hit daily 2 and ran into the SPX $6,700 call wall. Also hit the NQ daily 2. And tomorrow they're going to make a huge announcement with Bitcoin, something about a strategic reserve. So I hope that they're going to do what I proposed, which would be, I did this, 6 months ago. I posted it on my Substack. I proposed to do a stable coin with Bitcoin and gold or treasuries. And that way the government would always buy Bitcoin at, designated time periods throughout the year. Once or twice a year, they would come in and buy it to keep the market going forward. And you could time your trades, with that purchase to get the rally off of it. Sort of like a glorified halving. But I think it would be fantastic. I mean, to put the Bitcoin with gold, for instance, would be killer. I'm not so sure, it would help the treasury market. It would bring attraction back into, people wanting to invest in our debt, especially if they knew that the government was buying Bitcoin to keep the appreciation going so that you would make more interest in that vehicle as an asset class than you would paying for treasuries by themselves. I think it's an excellent idea. So hopefully they'll be borrowing my Substack report from 6 months ago and doing that. But I'm really looking forward to that announcement tomorrow. It should be something unique. I think we have some very, very good people finally in office today. And I'm just delighted that we have a killer Treasury Secretary. And also, I love, um, Lutnick also doing some excellent things with the alternative cryptocurrencies and things like that. So I think it'd be very promising to do that. You would attract a lot of capital. I keep coming back, showing my age, but people would invest in a stable coin Bitcoin like they used to do with the double E bonds, or better. I mean, even more because it's so much more popular. But and it would be so much more accessible. Back in my day, we'd have to wait till we got a paycheck, go to the bank, cash our check, and then get them to give us a 25 or $50 double E, and we'd walk home with it and stick it in the drawer, the sock drawer, and just let them pile up. Here, you just put them in a digital wallet and let them grow. And knowing that the government was behind it, going to be making automatic purchases, I think that's the key. So the stability would be there, backed by the government, so that it would always appreciate in price. I think that would be an excellent idea. But anyway, let's see how they do it, or if they're even going to announce this. However, they're going to do it. It'll be fun. All right. Thank you so much. I hope this makes sense to you. 6,700. We could be at the market high. It's going to be close. I mean, October 1st, we know that the VIX term is flipping long vol. So, and that will, be for the month of October. And at least through the October OPEX long vol. And then it will flatten out and give us that November, December Santa rally. That's the current trajectory of the volatility. I can't wait to show you this website for the options for the ETFs and the VIX and the SPX. You're going to love it. You are absolutely going to love it. I think they've done a fantastic job putting this site together, and it's going to be available very, very, very soon, a matter of days. All right, guys, I hope y'all have a good evening. And if you have any questions, let me know. And I'll chat at you later. Thank you.